Well, as promised, Gurmeet Chadha, Managing Partner and CIO at Complete Circle, joins us on the show. Hi, Gurmeet. Good morning. Well, what do you make of the overnight news on Maruti? The numbers are a little bit subdued. And this buying out the Gujarat plant as well, it's not going to go down with shareholders. How do you approach the stock from here on?
It is surprising, because they had earlier stated asset-light model and they made a case for how this would help in terms of, the contract manufacturing at the SMG plant. So a little surprising to me, and we need to see whether it will be all cash or equity issuance, because if it's all cash, then it's close to about 13,000 crores, which could mean, earnings cut and also possibly some impact on even ROC by a few basis points. We probably need to calculate that. And if it's equity issuance, then the dilution could be between 4 to 5%, depending on what price they take, in the board meeting. This follows after some flip-flop even on the royalty payments. There's some confusion, they wanted in terms of shifting to rupee payment and, bringing the royalty down. In fact, last year it could be close to like 4,200 crores. And I think the sector probably seeing some recovery after 5 years of tough period, right? I was seeing the volumes actually, we barely exceeded 2017-18 volumes in four-wheelers this year, right? And so I actually don't get it, although I don't hold the stock. And there have been reasons for non-performance over the last 4 or 5 years. This definitely doesn't help. I don't think the numbers were that bad. I think there was volume growth, the realizations went up. After a long time, I saw the adjusted EBITDA margin at about 10%. So I don't think the numbers are that bad. But I think this news actually should, in my view, is slightly negative.
Okay, it's slightly negative. So what is your advice to shareholders? Because clearly Maruti believes, and from the chat we had at RC Bhargav, that, there's a larger game here, right? They want to take everything, control of all the production as well, because they believe that they're going to go from 2 to 4 million. So after that initial cash outgo, that initial hit on the ROE, do you think the stock could bounce back? And what is your advice to investors who hold the stock?
I'm not sure, Sonia. I think if you see the market share also, it's down to 43% from almost 50%, while the sedan market share is still 68%. I think the SUV launch pipeline to me has been still not as what the market would have liked. Even the Jimny, I think the response is not as exciting as probably Maruti would have wanted. We'll probably have to see. I'm just talking of the first cut, my talks with some of the auto dealers. Even M&M, I don't know. I mean, even the RBL thing, I think the lack of communication is slightly surprising. So, two events, on I would not say strictly capital allocation, but raising again concerns on capital allocation, which I think has been an issue, with this. So I'm actually a little surprised on the timing bit of it. I think the communication probably should be more clear. Between the three, M&M, obviously there is valuation comfort, and I mean, maybe there is a larger plan of getting a scheduled commercial banking license. We don't know that. The buzz in the street is that RBL could be a two-way fight, for example, in terms of bids for it. But I think between the three, probably Tata Motors looks the best right now. All cylinders firing, JLR doing very well. Commercial vehicles picking up, passenger vehicles, they are doing well. There's a lead on they've taken an early lead on the EV portfolio, debt reduction. So I think all in terms of the relative attractiveness, I think Tamo looks better. M&M is also good purely from a valuation point of view, provided they give more clarity on the RBL stake.
Okay, Tata Motors looks better on a relative valuation, got that, and M&M as well. By the way, all auto sales come out later today, so we'll talk more about that in greater detail. Gurmeet, stay on. We'll take a quick break. On the other side, Anuj will be joining in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. Okay, all right. Manoj, thanks a lot for that. Well, Gurmeet Chadha is still with us, so let's speak to him about a couple of things. Gurmeet, from the entire earnings season that you've seen so far, what has the standout performer been for you? I know one of them has been Polycab, so I'm sure you're going to mention that as well. But, X of that, what are the other standout gainers that you've seen?
So I think, Sonia, despite, so obviously building materials space continues to do well. Not only Polycab, we've even seen, except for the MDF guys, where, there was margin issue, most building materials have done well. And I think banks and NBFCs stood out. I think there was a lot of concern in market on credit growth peaking out, NIMs peaking out, etc. I personally think we are in a very good structurally credit cycle. It will obviously moderate, not sustain at But even June fortnight was about 16%. So I think this credit creation, which is happening in newer segments and beyond the top tier 1, tier 2 towns, is something I think which is more long term. So stood out. And despite that, the two strongest private banks are still not done too well. Kotak, probably the profits have doubled in 3.5 years, and price is what it is. So I think, so there is still opportunity. The valuations are still reasonable. Some of the small finance banks continue to do well. We like Equitas, a few others. Some of the small mid-cap banks delivered very well. IDFC First had a very good set of numbers. I was very happy with the CASA, the credit cost, all metrics. They're guiding now for 1.5% ROA, 15% ROE. Stock making a new high. Federal Bank looks very interestingly positioned, very, very reasonable on valuations. Did a QIP. There is some reopening, value unlocking through FedFina, their NBFC, infusion of funds by IFC, and very good portfolio. In fact, the unsecured portfolio is just 4%, so very good mix there. So that's then one segment which we like, and I think pharma is picking up. I think that's one sector. I think it's a close watch for us. I think we've seen some of the CDMO names fly, including Newland, which we have discussed multiple times in our interaction, and Syngene. I think others will follow. A lot of molecules are in stage 3, and you will see a lot of validations going forward. So even healthcare to me looks pretty exciting.
Okay, some interesting ideas there, Gurmeet. Thank you for all of them. Great having you on the show as always. You have a good day, and we look forward to connecting again. Well, speaking of results, let's focus on one more. Sonata Software came out with what looked like a good set, and it was a good quarter.